want to start off with talking about demand because this is a topic that comes up a lot, and there are lots of divisions over when oil demand is going to peak, how long we're going to have oil being relevant for generating energy on the global economy, etc. And our numbers are different from the IEA's numbers. You have OPEC, which is bullish, but I personally believe that national oil companies really have a better feel for where demand is going, given your consumer base in Asia. So give us your outlook on the short term, but also the long term.
Sure, thank you very much. You have about 3 hours for that.
A few minutes, please.
Of course. It all comes down to energy demand, not so much oil demand, it's energy demand. Today, the world relies on every form of energy that it can find just to power the needs of consumers around the world. We anticipate between now and 2050 or so, energy demand will increase by about 50% from where we are now. That is faster than the population rate increases between now and that time. So that means on a per capita basis, we as human beings will be using more energy over the next few decades. So then the question becomes from where we will find that energy. And we posit that even if you take all of the announced and expected and potential alternative energy resources that will be available, solar, wind, renewables, other types of renewables. You take in gas, you take in everyone on the list. There is still a gap that has to be filled to fill the energy demands of the world. And we posit that oil will remain that fuel over the long term.
Till 2030, 2040?
We're seeing it at least until 2040 and into 2050. Absent something that nobody knows right now, that's what we are planning for. So the question then becomes, well, whose oil is that going to be? And we're saying that it has to be oil that is not only the lowest cost, but also the lowest carbon intensity. And for us, that is essentially our oil in Kuwait, in the Gulf. It hits both of those targets, and we have plans to keep it at the forefront of both of those targets so that it's not the dirtier oil that comes in. It is actually cleaner, where Scope 1 and Scope 2 emissions are offset, and we can talk more about that.
Sheikh Nawaf, but you mentioned a point about the cleanest barrels, etc. What we're seeing right now, and we discussed a little bit in the green room, that we're getting dirtier barrels. We're seeing the US talk to countries like Venezuela, for example. We're seeing more Iranian barrels onto the market. So it's the situation doesn't reflect what you're saying. Is there a concern from Gulf states, or specifically Kuwait, that you're keeping your capacity, production capacity idle while others are increasing?
Well, that's perhaps the short-term side of your first question that I didn't get a chance to answer, so I'll build that into this one. From the short-term perspective, oil's demand is just over 100 million barrels a day. The annual decline rates are, you've heard numbers, I think, earlier in the week of about 6 or 7 million. I think it's probably around 3 to 4 million, whatever the number happens to be. You're talking about an annual decline rate where you have to replace that oil production just to maintain current levels of supply. You will need a new Kuwait or a new United Arab Emirates every single year between now and...
New Kuwait, imagine that. I mean, where do you find it?
And where do you find that? So what we're doing is we're investing to build up that capacity. And I know our colleagues and brethren in the Gulf and the GCC are doing exactly the same thing. Because we believe that we are reliable suppliers of hydrocarbons to our customers, to the consumers, and essentially to our business partners. And when I meet with our business partners, with whom we have worked for decades, they know they've built refineries suited for Kuwait export crude. So we have a symbiotic relationship that's gone on for decades. When I meet with them, I tell them that We are business partners, not a supplier or a customer, because as you grow, we will grow with you. So they look to us as reliable suppliers of hydrocarbons to have the capacity to grow with their needs. That's one thing. The other side of the supply issue here is that we need to maintain spare capacity to deal with shocks to the system. This is a business that has not gone a decade without some major supply shock and usually a demand shock as well. And it costs us billions of dollars to build up and maintain that supply position, and keep it idle is another cost. But the minute you have a black swan event that causes the price to go up, a demand increase, but more likely a supply issue hitting another country someplace, the world looks to us to be able to bring that supply onto the market. And that's where you can actually make up all of those costs rather quickly and maintain a balance in the supply-demand situation for the market.
Yeah, and we've seen that dangerous situation where the U.S. has been pulling out of its SPR, depleting it almost just to control prices. But in the case of a real crisis, if you have this gap in supply, then what do? As you say, turn to the Gulf, turn to OPEC, ask to bring back that supply back into the market. Let's talk a little bit on the supply side and what KPC is doing. You are planning to increase your capacity to 4 million barrels a day. Walk us through that and
Sure.
tell us a little bit about what you're spending, especially with investment related to that.
Sure. As part of our commitment to grow with our customers, to be reliable, and to meet the energy supply needs of the future, we recognize that there's a greater call on Kuwaiti crude. And that, as you know, is essentially by taking all the other resources out there and then seeing what else is left to fill the energy gap that the world is going to need. And that's where comes in as a call on OPEC and then ultimately on Kuwaiti crude for us. We see that call is going to go up to 4 million barrels a day, and we are making the investments to get there. Our capacity is about 2.8, almost 2.9 currently. There are OPEC agreements on supply at the moment. We are investing about $10 billion a year over the next 5 years just to take our production from about the 2.8, 2.9 to about 3.2, and we'll meet it well within that 5-year range. From there, it is further through exploration that we've been producing oil in Kuwait for 85 years, all onshore. We have huge offshore fields that we have not yet touched. We are drilling our very first offshore exploration well right now, Nokhada 1.
What area?
In Kuwaiti waters.
Okay.
And we're looking to that and other fields to bring in additional production. That's one thing. Second is enhanced oil recovery. We have, again, producing for 85 years. Almost all of it has been primary production, the easy production. We've moved now into secondary, and ultimately we'll move into tertiary productions. But on the secondary side, we will use gas. We will use other methods to stimulate reservoir pressure and more production. That will increase our production. I have one specific example from a field in Kuwait, Bahra. The very first well in Kuwait that produced oil was not the Burgan field, which is the second largest field in the world. It is a small field called Bahra. And it produced for a bit, ultimately petered out, and it was decided a few decades ago that it really was not worth continuing to produce from that field. We re-entered the field a few years ago with different technology, working with partners around the world. And this is the really important part, is we have to, for all of this to work, producers and consumers have to work with partners as partners around the world. We worked with a partner to stimulate the production. It went from about 5,000 barrels a day to well over 50 right now. And we have clear line of sight to get it over 100,000 barrels a day from a field that most people consider to be done, too difficult to produce.
But what about the cost of production?
Cost of production, we maintain some of the lowest costs around the world because of the strong aquifer pressure that we have in our fields. In the secondary recovery, certainly costs will go up, and the obligation on us is to work with our contractors and our suppliers to maintain that cost control so that we can keep the Kuwaiti barrel really the lowest cost in the world.
And these are heavy barrels?
No, these are.
Grade?
We have a separate heavy oil field facility that is producing 50,000-60,000 barrels a day right now. It'll keep growing over time. It's considered by Kuwaiti standards to be somewhat heavy. To be heavy, by international standards, it's really not that heavy. We don't need a diluent. We don't need. It flows naturally, but it's part of the mix because we have tremendous resources in Kuwait that we have not yet tapped, and that's going to help us get to our 4 million barrels a day. And that, by the way, you asked about cost. I mentioned sort of the annual cost over the next 5 years, but to get us to our 4 million by 2040 and maintain that is by 2035 and maintain that is going to be about $410 billion. 300 of that is on the upstream side, 110 or so is for the energy transition to maintain the competitiveness of that barrel against any other barrel in the world.
We're going to get into the energy transition in a minute, and I'm going to ask you about what you're doing to cut emissions. But since you mentioned fields, I'm going to ask you about a very famous field that's always circulating in the press, Durra. What's going on there?
Durra field is an offshore field, gas field that was discovered in 1965. It's jointly owned by Kuwait and the Kingdom of Saudi Arabia. We will produce it together. We are now, after agreeing with our brethren in the kingdom on how to produce it, how it's a gas field, how the gas will be allocated, we anticipate production of about 1 billion standard cubic feet a day of gas. It will be split equally between the two partners. We are now in a stage of essentially revalidating the feed that we did, the front-end engineering and design that we've done for the field.
So the feed is complete, basically.
The feed is not yet complete. It will be complete by next year. And then from there, we had a feed that was probably a decade old. So we needed to revalidate it, obviously, with all the technological changes that have happened since then. So we're updating that. We will then ultimately move into FID on the facilities that we need to build and move from there.
Any obstacles being faced by neighboring states, and by that I mean Iran?
Thankfully, I work for KPC, not the Foreign Ministry of Kuwait. Okay. But I will say this: as a recovering lawyer myself, and someone who knows something about international law, I know that under the UN Convention on Law of the Sea and any other international convention, the field lies squarely within the continental shelf of Kuwait and Saudi Arabia, and it's a joint field completely.
Now, let's talk about cutting emissions. What's KPC doing to cut emissions, and how are you adapting to all of these transition pressures?
Sure. I think it's important that we all work together to be part of the energy transition, to make it a smooth energy transition. I say this quite often: it's a transition, not an energy switch. It's not going to happen over time. People and countries that have tried to switch very quickly discovered over a hot summer or a cold winter that you will need continued supplies, especially when you have other countries perhaps curtailing supplies or cutting them through sanctions. So you're going to need all kinds of energy during this transition. And what we're doing is looking at it through 3 prongs. First of all, we will cut our Scope 1 and Scope 2 emissions. We will reach net zero Scope 1, Scope 2 by 2050. We have a clear line of sight on that. In fact, we just announced it. I was happy to announce it in Kuwait at a major conference we had in Kuwait on October 9th last week. So it's fresh. It's on our website. You can access it there. We'll go through reduce our Scope 1, Scope 2 emissions. A big portion of that will be through CCUS, and I think that is one of the technologies that we all as humanity need to invest in, because it removes carbon that would otherwise dissipate into the atmosphere. In our case, we would take carbon from our refineries in Kuwait, CO2, and inject that into our reservoirs to stimulate production. That frees up the gas which we were otherwise going to inject into those fields, and that gas can then be used for petrochemicals or any other needs. That will take our Scope 1 and Scope 2 emissions down. Second, we're looking at investing in alternative energy businesses that complement our own. And here we're really relying on an international network of existing KPC stations and businesses under the Kuwait brand that we have in Europe. And through the about 5,000 service stations that we have throughout Europe, we're rolling out EV chargers. We're building Italy's first retail hydrogen site, and that'll be ready in about 2026. And we are investing to make sure that we grow with our customers' needs and answering the customers' requests for different solutions. So fleet customers, for example, that use the Kuwait card in Europe are demanding that we have available to them diesel, gasoline, and EV charging. So to maintain our customers, we have to maintain all of those solutions. So that's the second thing we're looking at. The third one is circular carbon economy, and we're investing in that quite heavily. And carbon offsetting. One of the things that we're doing in Kuwait in our Menagish oil field is this is one of the fields that's now gone into secondary recovery. So you need stimulation. You can inject, as I said, gas, or you can actually insert electric submersible pumps. We've been blessed by God and nature to have strong pressure underground that pushes oil production out through our wells. And that's why, as you know, in 1991, when Iraq torched 732 wells, if we hadn't actively put those out, they would probably still be burning today, because of the pressure that we have underground. Over time, that pressure starts to go down, and you need to stimulate. So we're using ESPs, electric submersible pumps. Those, by their very nature, by their name, are electric, and they need quite a bit of electricity to run. Our grid, the national grid in Kuwait, is hydrocarbons based. So from a Scope 2 emissions standard, that is not good for us. So what we've done is install solar panels at that field on those wells. So now we're able to run all of the ESPs in the Menagish oil field with solar panels, and that essentially has taken our Scope 2 emissions down to zero. So that's part of what we're doing. Another thing, and it's a series of rather boring projects that combine together to create a mosaic of energy transition projects that will get us exactly where we need to be. Another one of the boring ones is, for example, spent catalysts that we use in refineries. Really expensive stuff, metals that would otherwise have to be disposed of. We've asked for bids now, and we've received bids to build, as part of FDI in Kuwait, a new facility that will recycle that spent catalyst. It's an expensive effort, but it's something that will, again, reduce our
Can you give us a kind of scope or the size of investments that's going into the target? I mean, reaching net zero by 2050. What's the spend like?
I mentioned about $110 billion for those types of things. One other thing, again, really interesting stuff. If you work in this business, are flaring. we used to flare well over 10% of the gas that we produced. We realized that that doesn't make sense, not only for environmental reasons, but also economic reasons. You're burning up cash. So instead, we installed in our facilities, capture facilities where we now flare less than 0.5% of the gas that we produce. We are now at the forefront of the international oil industry with the lowest gas flaring in the world. We did that primarily because the economics worked, but also because it's the right thing to do environmentally. So those types of small little things, those cost a lot of money. They come together and they really reduce your emissions down and they put you at the forefront.
Let's talk a little bit about downstream and the Al-Zour refinery. You're currently at a capacity of 1.4 million. Please correct me if I'm wrong.
Yes.
Are there plans to expand that further?
Yes, we are. The Zohr refinery itself is 615,000 barrels of oil a day capacity. We will announce in the next few days its full commissioning. It's basically up and running. You can take this from me now. It is up and running and producing at that number. Once we are confident of its stability, then we'll announce publicly that it's complete. In the meantime, it's producing. Our refining capacity in Kuwait will be 1.4 million barrels when we make that announcement. We have a plan to move up through debottlenecking, through various other initiatives, not building a new refinery in Kuwait, but debottlenecking and those initiatives to move us from 1.4 to 1.6 million barrels a day.
By?
By probably at the end of this decade.
Okay.
And that will move us to really selling quite a bit of product onto the market as opposed to
And that's
crude.
going to Asia, mainly.
It's actually going, our crude is going mostly to Asia.
Okay.
We've discovered now product is going everywhere, and specifically going to Europe quite a bit. The Zohr refinery came online last year, right when Europe needed diesel and fuel oil more than ever before. And we had built the refinery essentially to provide ultra-low sulfur fuel oil to power stations in Kuwait. Then we realized we're going to use gas instead of fuel oil. So we have this refinery, this is a topping refinery that has all this fuel oil that needs to go to market. Lo and behold, the crisis happens, opportunity happens with it, and we have a wall of distillates coming from Kuwait into Europe. Fuel oil, diesel, jet, and it's found a market very, very quickly here and at very economic rates. So what we thought was a refinery, $15 billion refinery that we didn't really need anymore, turned out to be a refinery that all of a sudden is one of is at the forefront of the energy transition and crisis management at this point.
That's the kind of shift and dynamic that we're seeing. A lot of these refineries are moving from north to south, so it's changed the trade flows, and yeah, it's definitely an opportunity for Kuwait. Now, I'd like to take a couple of questions from the audience. If you have a question, please, if you can raise your hand. We have one at the back. If you introduce yourself.
Hi, this is Clara from Energy Intelligence in Singapore. Could you give us an update on your Nisong project, refinery project in Vietnam, the problems it's facing, and whether Kuwait KPC is still committed to the joint venture? Thank you.
Sure. We have a joint venture project in Vietnam with partners. We are at 35.1%. Our partners from Japan, Mitsu Kosan, is also at 35.1%. Our partners from Vietnam, Petroleum, are at 24.9%, and if I'm not mistaken, and 4.9% is also Mitsui Chemicals. It is a 200,000 barrel a day refinery in Vietnam. It supplies about 40% of Vietnam's energy or gasoline and diesel needs. It's a diesel factory essentially out there, and it is producing well above its nameplate capacity of 200,000 barrels a day. So it's now gone through a turnaround, a major turnaround, and it's the first turnaround since it started working. And right before the turnaround, it was working. It was going at 120% of nameplate capacity and sustainable at that. We anticipate that after the turnaround, it should be able to maintain that quite easily. The refinery has gone through financial challenges, and that's not a secret. We're working with our partners in all of the ones I just mentioned to find a solution for its financial challenges through the next few years, because we all are committed to the future of that business and that refinery, especially because it is an extremely well-built and well-functioning and well-run refinery that is essential to the energy needs of Vietnam. So we're working together to ensure that its financial stability will be strengthened and maintained over time. And we are committed to it, yes.
Just to follow up on that, can you tell us if KPC plans on any acquisitions in the future? What kind of assets would you be looking at?
Typically, our international acquisitions would be done through our international companies. I was lucky to have worked in both of those and ran those both. KOFPEC, the international upstream arm, is the one that essentially really is at the forefront of those acquisitions. And what I've tasked them to do over the next period is look at opportunities for new fields, new entries that have tie-ins with our existing fields in Kuwait. Not physically, but they might face similar types of technical challenges that we're facing in Kuwait, and we can cross-post along those lines. And we've done that. On the downstream side, Kuwait Petroleum International, the Kuwait brand that I mentioned, they've gone through, they've got the Vietnam refinery. We also have a new refinery in Oman at 230,000 barrels a day. That's gone on stream now. And we have a 50% of a refinery in Milazzo in Sicily, in Italy. On the refining side, I think they're okay where they are. They're looking at how to build out the Kuwait brand additionally to ensure that it survives through the energy transition, especially in Europe.
Future-proofing, basically.
Yes, exactly.
Any other questions? We have one here.
Hi, Jamie Ingram from Middle East Economic Survey. Thank you for your comments, Shaikh Nawaf. You talked quite a lot about how you are increasingly refining a lot of crude domestically, so I was wondering if you could talk about how that impacts your crude marketing, how you're working with partners, especially with 2024 coming up, how you expect that to play out next year. Thank you.
Sure, of course. It's been a source of contention, I'll tell you, within our marketing business in Kuwait, between the crude sales division and the products division. Each of them is trying to go after more customers, and certainly we have a lot of customers waiting in line for all of the above essentially. Certainly getting Zohr refinery on stream, that's just over 600,000 barrels a day. That was crude that would otherwise have been sold in the international market, is now going to be sold as product. So that's taken out from some of our customer base. But we are committed, as I said right at the beginning here, to build out our crude production capacity. Then the next question is making sure that we have the proper allocation of quotas within OPEC to ensure that we can continue to meet the requirements of our customers around the world. I'll say that our customers have, and I said this before, our customers have been our customers for decades. We will keep them for decades, and we will work together on ensuring that we have the stable supplies that they need to continue to grow.
Unfortunately, we ran out of time, as you can see. Shaikh Nawaf, thank you very much for joining us, and very interesting conversation.
Thank you very much, Amna.
Thank you.